if you are a forex trader, use options on forex, because you will just get a lot of advantages if you know how to trade forex and you add the options superpower to that. If you are a crypto trader, use options on crypto, because you will get all the options advantages and you can add it to your crypto trading skills.
Have you ever wondered if you can trade options on forex or even crypto? Most brokers don't offer it, but it is possible. Today's guest is from Milan in Italy and will show us how it works and why it is worth your attention. Welcome, Andrea Vaturi.
Good morning, everybody. Good morning, John.
Andrea, let's get straight to it. Why should we even consider trading options on forex and crypto?
Well, the forex market and the crypto market are two really big and interesting market for different reasons, of course. The forex markets, as all traders know, is the biggest one, and is sometimes, most of the times, it's the market that attracts new traders, and people very often get close to trading attracted by some euro dollar stuff. Then most of the time it doesn't work as they planned, as they expected, and so they just drop forex and maybe they go to stocks and indices, etc. But there is a very unique and profitable way to trade the forex, using options as a super vehicle to trade this very interesting market. And regarding crypto, well, of course, it's the youngest and most interesting market, probably one of the most interesting looking at the future. So knowing that you have the possibility to trade options and using options superpowers in order to trade Bitcoin, Ethereum, Solana, etc., is something that options traders should be aware about.
And I'm sure many of our viewers are not aware of this, so I'm really curious to get into the details of this. But first, tell us a bit about yourself, and especially as an options trader.
I started trading options and studying options almost 17 years ago. I fell in love with these magical instruments really young, and I started studying voraciously everything I could find about this topic. I studied mainly in the US environment, in the American world, because Italy didn't have much to offer, neither in terms of the very market, the very options market, and neither in terms of education at the time. So I started looking at the US market and I really studied a lot. Then I felt the need to share what I learned about this topic with the Italian trading world that was not aware of how cool the options world on the other side of the ocean was. And so I started basically teaching and making free content on YouTube about that. And then everything kind of built up naturally, and I now have a school in Italy making webinars, etc. I'm a certified educator for the CME, the Chicago Mercantile Exchange, and we in Italy are partners with Tasty Trade. We have a very nice school with thousands of students, and we love sharing what options are all about, both on regulated markets and on not regulated markets like forex and crypto.
How popular is options trading in Italy?
Most of the investors are traditional investors, buy and hold kind of style, and options traders are probably in the 5 to 10% portion of the overall people trading in Italy. So the numbers are not that big. We're not that big of a nation in the first place. So numbers are pretty small, but we are doing our part in spreading the options word outside of their limitations.
Most brokers don't offer options on neither forex nor crypto. Why is that?
Mainly because they're not regulated. So you have to have a special kind of data connection from the broker to the market. If we talk about forex, you have to have access to an interbanking system and data flow. So basically, it's not that common that brokers take the time to build this kind of technology to get the right prices of options. So they're not very popular. What you find most commonly are options on futures. So basically, the CME offers futures on currencies like the 6E, for example, that is the futures on the euro dollar forex exchange, and you have options on that future. So that is something that is a little more common, and brokers do offer that, but it's not the same. We are talking about a different kind of vanilla options, and we are talking about all the crosses and all the currency pairs. We're not only talking about the ones with the US dollars, we're talking about the one between the pound and New Zealand dollar, or between the euro and the Swiss francs. We're talking about basically all the 28 crosses between the 8 major currencies. And about crypto, basically because it's a young market that was fully developed by a new platform that came about a few years ago called Deribit, that first started this whole concept. They developed the product, they developed the market, they grew a lot, and they were acquired by Coinbase a few months ago. So it was something new. Now a few more platforms offer options on crypto, Binance even, but they were the first. And their platform was specifically designed for futures and options traders. So it's something they really invented from scratch.
So we will get into the details both on forex and on crypto. But before we do there, can you just sum up what makes options trading on these two assets different than options on stocks and indexes and futures?
First of all, the obvious answer, the asset class, meaning that you are trading something very different and pretty uncorrelated to the main indices and the main stocks. Because forex pairs are, some of them are totally non-correlated to the markets. There may be correlated to some commodities like oil or natural gas or whatever. They may be correlated to different dynamics regarding interest rates and more fundamental kind of economic elements, but not so much to the ups and downs of the S&P 500 or Apple or whatever. So this is the first thing. Crypto, we know that sometimes it's very correlated to the market, sometimes it's not. So correlation, it's not that big of a deal. But in that case, I love something different about options on crypto. I love the fact that I can have a very strong directional exposure to the ups and downs of crypto, managing risk in a very precise ways. And on the other side, I can sell premium on a very volatile asset like crypto is. So implied volatility is really high. Some premiums are really rich, and of course, you have to be able to manage the risk when you sell options, as we all know, but they're very interesting. They're very tasty for an option trader. Okay. So first of all, of course, it's the asset class itself. And second, they're both cash settled. Both forex and crypto options are cash settled. So it means they're a little easier to manage for the average trader because there is no risk of assignment on anything. Forex options are cash settled in the currency that you are trading, and crypto are cash settled in crypto itself. So if you trade a call or a put on Bitcoin, you will be liquidated in and settled in coin. Being cash settled, it's very easy for a lot of traders that don't risk the assignment or earlier assignment, so it's easier to manage in terms of margin, etc. And the third thing is that they are pretty small. They are pretty granular in terms of size. So they're really good for the average trader because they allow you to manage risk in a very granular way without exposing yourself to bigger risks. They don't require a big account. So they're really good for even the early option traders that is starting to trade options and wants to kind of dip their toes into the options world.
So let's start with options on forex. Can you just give a very brief explanation of how forex trading takes place?
Absolutely. Forex trading is, of course, the trading the change in rate between two different currencies. So the most famous and popular one is the euro dollar, where we basically trade the change in price, the change in strength between these two currencies. When the euro gets stronger compared to the dollar, the rate goes up. And when dollar gets stronger compared to the euro, the rate goes down. It's a ratio. So both of the currencies can become stronger, but the one that goes the strongest produces a change in the ratio. So maybe both euro and dollar can rally in terms of value compared to all the other currencies. But if euro rallies a little more, then the rate goes up. If dollars rallies a little more, the rate goes down. So we have to keep in mind that it's basically a fraction. Okay, you have a numerator and then a denominator. The most common, the most traded currencies in the world, of course, are the three Europeans: euro, Swiss franc, and British pound. Whereas then you have the two North American ones, so the US dollars and the Canadian dollars. And then you have the Japanese yen, that is a little bit of an outsider, let's say, geographically speaking. And then you have the two oceanic currencies that are the Australian dollar and New Zealand dollars. So if you combine these 8 major currencies, you obtain 28 crosses between every one of them.
You forgot the Norwegian krone, of course.
Of course. One of the most important and traded.
Okay, so how do options work on these kind of products?
Options on this product work by having a contract. The smallest contract you have, it's worth 10,000 unit of the first currency. So whenever you have a pair, you have currency number 1 and currency number 2, euro, dollar, 1, 2. When you trade one call on the euro dollar pair, you are trading a size that is 10,000, the currency number 1. That means the euro. Okay. But the price of the option, the premium, is measured in pips, PIP, that is the measurement unit of the forex world. Okay, 1 pip is the smallest unit of movement that a forex pair can do. And when you trade an option, 1 pip corresponds to 1 unit of currency number 2. So 1 pip in the euro dollar option corresponds to 1 US dollar. Okay, so whenever you see, for example, that a call is worth 50 pips, it means that it costs $50 for the buyer and it's a $50 credit for the seller.
Where can you trade these kinds of options? We already pointed out that the brokers don't offer it.
There are just a few brokers that offer that, but there is only one that has a platform that is fully specifically designed for this market, and it's called Ava Options. So what I will show you now is the Ava Options platform that was born from his inventor, specifically for trading, for forex options trading.
Maybe you can show us your process of trading these options on the platforms that you use.
Yeah, of course. What I start from, of course, it's a basic charting platform like TradingView is the one I use the most because I really like it. Just to show you some basics for those that are not familiar with the forex trading, this is the euro dollar rate of change on the TradingView platform. That is just basically ticker EUR USD on a daily time frame. So if I zoom out, you see a bit of my drawings. All these drawings are options trades, and I will explain later, but now let me get rid of that. This is the daily change in the euro dollar. So you can see that, for example, here we were at a rate of change between euro and dollar of 122 between the two currencies, whereas this low was at 0.96. So a very strong change in the ratio of strength between these two currencies that happened in about a couple of years, where euro lost 22% compared to dollars. And then from this low, we went all the way up and then a little bit of down and then again up. And now we are at 118 a few weeks ago, whereas now we are trading for 115. Okay, so this basically is the number that answers the question, how many dollars is a euro worth? Okay. So, or if you flip it, how many euro is $1 worth? It depends on how you turn the ratio. Okay. And as you can see here, I have all the 28 forex pairs. This is, for example, the ratio between the Australian dollar and the Canadian dollar that is trading for 0.91. This is euro compared to the New Zealand dollar, and so on and so forth. Okay, USD CAD, etc., etc., etc. Whenever I take a trade on any pair, I draw it because I like to have kind of a visual trading diary beside the one I keep on my Excel spreadsheets and Notion databases, etc. But I like to have a visual one. So basically, whenever I take a trade on an options trade, I draw it in a very minimalistic way. I put a colored line from the day I open the trade to the day the option expires. And then I draw a black thin line on the break-even point of the trade. So basically strike plus premium. And if inclination goes this way, like towards the strike line, it means that is a profit basically. And the strike line starts red whenever I open the trade because there is open risk. And then when I close it, I color it green because it's a profit. So whenever you see a green line, it means this is a profitable trade. Whereas when you find a red line like this, this is a stop loss. Okay, this is a losing trade. The kind of trading style that I have on Forex is basically a mean reverting kind of trading style, because Forex is a market that if you analyze it and you backtest it and you go deep into some studies, you realize that it has a very strong mean reverting kind of habit. Okay, so it means that when it goes up with a lot of volatility, it tends to come down or at least to go sideways. Whereas when it goes down with a lot of volatility, then it's a good moment to open a bullish trade, basically. So I basically sell options. I sell puts when it goes down a lot, and I sell calls when it goes up a lot. Of course, I have some indicators to help me give an objective measurement to this goes up a lot or down a lot. So we use some indicators, but that's basically the main strategies that we operate. And actually, it has been really profitable in the last 4 to 5 years because the mean reversion of Forex is fully on. You can easily see that. When it goes down, we sell puts. When it goes up, we sell calls. And it has worked really, really well overall in basically all the pairs. So this is the main idea. If you want to go to the platform and see a little bit how it works, this is it. This is the Ava Options platform. On this left side, you can select the pair that you want to trade. For example, euro dollar, you just click here. And here you have a menu that allows you to choose between the main options combinations, from the simple call and puts to the vertical spreads, ratios, straddle and strangles, butterfly, condors, etc. And you also can trade the spot, of course. You're not limited to options. If today I wanted to sell a put on euro dollar, I simply select put here, and then I have to select the expiration. So I go here and I can select, for example, the 18th of December. That is 45 days out. Perfect, tasty style. And then here I have a kind of a resume of the operation. This is the strike. I'm here buying the 115.50 put for a price. This is the premium of 92 pips, because you have to move the comma by 4 places. So 0.00926 equals to 92.6 pips. Okay, you just move the comma by 4 places, and this is because we have a 10,000 multiplier. Okay, like we said before. And then you have the D that is indicating the delta, and then here you have this V that is indicating the vega of this contract. So if I want to sell, I just click here and it turns from a buying operation to buying trade to a selling trade. And you can see that this platform has this very interesting feature of plotting the payoff of the trade right in real time on this left side. That is really useful because you can easily see the change in payoff with the change in strike, because you change strike simply sliding up and down with this slider. So it's really easy. And of course, you can see here in the numbers the reflection of the change in strike, both on the profit and on the loss, on the risk of this platform. You can also change the measurement unit. You can measure it in euros, that is the currency number one. You can measure it in pips, and you can measure it in dollar, that is the currency number two. So basically, if you want to go out of the money, you can just slide down a little bit and you get to a 30 delta put options on the euro dollar that is strike 114.25, and that is worth $39. That is the amount of money that you get if you sell it, and is the amount of money that you spend if you buy this put, if you have a bearish view on this currency pair.
What about liquidity and spreads compared to normal options?
That is a little bit the weak point of this instrument, because liquidity is there because it's an interbanking system, so you will never have a problem getting filled. But spreads are definitely higher than regular forex trading, because on regular forex trading on the euro dollar pair you get 1 pip spread between bid and ask, whereas here you go on about the 5 to 6 pips. So it's a lot more in terms of percentage wise, it's a lot more. But on the other side, you get all the benefits of trading options. And this is not so much the cost of the broker, it's the physiological liquidity of the market, with a little spreading by the broker that of course gets a commission out of that, because there are no commission on this product. It's only the spread. You only pay the spread, and that's it. From my experience, this higher cost is completely overcompensated by the advantages that you have by the fact that you can trade options on this market.
Are there special conditions you need to be aware of, or special risk factors that you need to be aware of compared to normal options trading?
I would say no, because one of the factors that is an advantage compared to regular markets is that both Forex and crypto are basically open 24/7, or better, crypto is open 24/7, no exceptions. Forex is open 24/7 from Sunday night until Friday night. So basically, you only have the weekend where the market is closed. So there is the gap risk that you have on the regular market. You almost don't have it on the Forex market, except with the exception of the weekend. So you have, if you sell options and if you have naked position, let's say, the occasions where Forex market has a strong weekend gap are really rare. We can think about the euro franc in January 2015. Recently, the yen had a little bit of a weekend gap. As for what is my experience, if you manage risk and size in a very smart way, the weekend risk is really negligible.
And you said that your main approach is mean reversion trading. What type of strategies do you then typically use? Is like iron condors, credit spreads, or other strategies?
No, I don't use complex multi-leg combination like iron condors and stuff, because of the cost of the spread that we just mentioned. If the spread is too wide, if I put together 4-5 legs like we can normally do on regular markets, then the overall cost of the position is too high, and so this eats into the profit zone. The strategic consequence of having a high spread is that we mainly have to use single leg strategies, or sometimes 2-leg strategies, not more, because otherwise it's too much. So what I do is I mainly sell options in a mean reverting kind of style. Sometimes I buy options, always in the mean reversion, when I really expect, after a strong movement, I really expect a strong bounce, so a directional kind of bounce. I maybe buy calls or puts, single legs. Or sometimes what I do is, when I see a prolonged period of low volatility, so the price is really ranging in a narrow range, I buy straddles because an explosion in price and volatility is really probable after a prolonged period of low volatility. Of course, I have indicators helping me to decide when it's the highest probability moment, but this is what I mainly do. One leg strategies or sometimes two leg strategies, not more.
So let's move to options on crypto. But first, let's repeat how is crypto trading typically done? I haven't done that either.
Oh, well, that's something I think you're a little bit missing on, John. Let me tell you, because crypto trading is fun, even though I'm not a crypto guy. Actually, today I'm talking all about forex and crypto, but I mainly trade regular markets. I love SPY, Apple, Amazon, etc. So don't mistake me for the whatever crypto guy on the web. But I've had the luck to come across the crypto world really early due to a friend of mine. Thank a lot. So I actually got into the crypto world early when prices were really low. So I had a very good last few years due to the strong rally in crypto, but also having my natural interest in option, plus looking into the crypto market because of this story, then of course it was natural for me to look into the options on crypto. So I came across this platform called Deribit a few years ago when they were basically just born. And I got in contact with the founders that are people from Northern Europe, from Belgium. And I had the chance to really chat with them and to understand how they were creating this new market and this new product. They were really pioneers on that. I followed their development with a lot of interest. Then they had to move to offshore because European regulations was too strict. So they were losing market shares to Binance and all the other competitors. They moved offshore, so I lost contact with them, but I kept using their platform. And then I got the news a few months ago that they were acquired by Coinbase. So I guess they're doing well, very well overall. Crypto is really interesting, John, mainly because of its volatility. On the other side, as you know, volatility is a two-edged sword because it can kill you and it can make a lot of money. It depends on how you trade it. So for me as an option guy, having options on this product helps me navigate this really strong implied volatility. Let me show you the chart of Bitcoin. This is the regular Bitcoin dollar chart on TradingView. If we go, for example, on the last 5 years, this is what we get. So a very strong uptrend overall. This is the weekly chart. A very strong uptrend, but with a lot of volatility, with a lot of ups and downs. We started 5 years ago on the $17,000 mark. We went all the way up to the 68, and then we went all the way down back to 17 and 16. And then from there, we started a strong rally all the way up to 100Ks. Now we went all the way to 125, and now we're back to 107 today. So a pretty nice roller coaster overall. Of course, options help you navigate this volatility in all the manners that you can imagine, with all the advantages that options can give you, both in the buying side of options, when you buy calls and buy puts, and you can have a directional exposure with a limited risk, and also on the selling side, because of course you can sell rich premiums and make some very nice combinations. So this is the platform I'm talking about. This is the Deribit platform. You can see here that now you have Deribit by Coinbase. So you can see what I was telling you about. This is the option chain of the crypto world. You have quite a few alternatives here. And this is the chain, like a regular options chain, where you have here all the expirations available, from the one expiring tomorrow and the day after tomorrow and the day after. And so you have all the close expirations, and then you have all the far expiration from the November monthly expiration until next September 2026. So you have everything, and you can easily switch with this selector. And here you have all the option prices that today are loading a little slower than usual. Normally it's instantaneous, so that's probably something going on. But normally you have prices loading up really quickly like now. This is the at the money, of course. You have calls on the left and puts on the right. And you can see very easily the bid and ask prices. You can have the IV both on the bid and the ask size. You have the delta here, the open interest. So everything that is needed for an option, for an experienced option trader to work. And you can see the prices. You are looking at the monthly November expiration. It's 17 days away. You can see it here. And the underlying future is quoting $107,723. That is basically the money here. And for example, just to give you a reference, a 32 delta call right now costs about, let's say, something less than $2,000 if you want to buy it, and you will get about $1,900 if you sell it. So there is about a $100 spread right now.
What type of strategies do you typically do on crypto?
Mainly do two kind of strategies. I sell the weekend volatility because there are some pretty strong tests and back tests and studies done on that the weekend option, the weekend volatility is repeatedly overestimated, meaning Saturday and sometimes Sunday as well, options are pretty rich compared to the average movement of the underlying. So I mainly sell the weekend volatility between Friday night and Sunday, or between Friday night and Monday, okay, expiration. And then on the other side, I mainly do two kind of trades. One, directional trades. If I have a strong opinion or strong indication for a rally or for a drop, so I may buy calls and puts or sell calls and puts if I have a strong directional opinion. And on the other side, I work pretty much on the calendar kind of strategies, because sometimes it's really interesting to buy a longer term expiration and to sell a shorter term one, because the theta difference is really, really interesting, really high. So you can almost daily sell options to lower the break-even point on the longer term expiration. And that is a really profitable approach from my experience.
Are there special considerations or risk factors that options traders should be aware of in this particular options market compared to the normal one?
Yeah, let me mention one important thing. The dimension, the size of the crypto option contract. Mainly, the regular multiplier is 1-to-1, meaning one call contract or one put contract has a multiplier of 1 Bitcoin. Okay, so the size is one option contract to 1 Bitcoin. So normally it would be a pretty big contract, but you can trade as low as 1/10 of the contract. You can trade 0.1 contract, call contract, or 0.1 put contract. This allows us to be pretty small in terms of size management and money management and risk management. So if I wanted to buy 1/10 of the call contract that I just showed you a few minutes ago, I would not spend $2,000, but I could spend as low as $200, 1/10 of the contract. So that's pretty interesting, and it allows you to get an exposure to Bitcoin and crypto volatility without risking much and keeping risk really under precise control, since, as we all know, options, if you buy options, we control the risk in a very, very precise manner.
I usually ask my guests to rate their strategies from 1 being very low to 10 being very high. That may not apply here since we are talking about many different strategies. But if you look at forex options trading and crypto options trading in general, how would you compare the risk level to traditional options product? Is it as same risk level, or is it more risky in general, or is it lower risk in general?
I would say that if you keep your own size management policy under strict control and under smart control, these two markets are really low risk, mainly because of the size of the smallest contract that allows you to risk between a few tens of dollars. So like 40, 50, $60 to the few hundreds of dollars in the smallest size. So you can really size up in a granular manner and decide exactly how much risk you want to take on every single trade. So if you make that decision in a smart way, or helping yourself with some tools, we have a lot of risk management tools that allows us to keep it rational and not having emotion and greed guide our decision making process. They can be really low risk markets. So on a scale of from 1 to 10, I would really put it in the lower third. So 1, 2, 3, I would say, not more.
Andrea, what have been your results of trading these two asset classes over the last few years, and how do you measure your results?
Yeah, let me show you some of the results we have. Basically, we had this equity line in these last few years. That is a good one with a few drawdowns, as it's normal in this world. This is the forex trading one, yes. And this is the one that I'm having on our trading room account. I started a real account a few years ago when we started this whole forex options trading project, and with a $10,000 real money account. And now it's about 23,000. But it's not so much about the result, because as we know, as traders, it's not about the super profit. It's about how you get there, and the risk management, the money management, the margin, and the quality of the trading. And I'm proud to say that this is a good results, but obtained in a very risk controlled way. That is the most important thing, with very small sizes. You can see this small green dot, it's the occupation of margin that we are having on the account. If I put my cursor here, you can see that we are just using 3.4% of the margin of this account. That is about $800, and we have about 22K free. So to some traders, this could look like an underutilization, an usage of margin, because it looks like you're basically using nothing of your account. But that's not true, because we are managing size using risk as a main driver. So risk management in this case is more restrictive than margin management. So we don't care if the account looks empty, because we are managing risk in a very controlled way using our spreadsheets. And we are about to turn these spreadsheets into some web apps, of course, in a more professional software, where we basically calculate the single risk of every trade with a lot of attention. And then we have an indication of risk by this tool that we call equity ghost line. That is basically a tool I invented to manage risk carefully, that allows us to really be careful about all the metrics of our operations. We have everything tracked really carefully about the single currencies, about the relationship between the winning trade and the losing trade, the percentage of winning operations, the seasonality that we may have in terms of months, the years, the single crosses, the single trades, etc., etc. So we try to be really careful about that and to trade well. And to me, trading well means keeping a good edge in terms of alpha, of statistical advantage, while having a lot of attention to risk management. This is my style, my trading style, let's say. So this is the forex side. On the crypto side, these are two equity lines of two different accounts, where I'm trading mainly the weekend volatility strategy with a little bit of the directional stuff. These are two of the accounts that we use in our trading room. When I say trading room, I mean that everything I'm mentioning is done publicly. So it's not a back test, it's not a demo account, it's public trading done with our students. I do every trade, I announce every trade before I do it on the platform, and then I manage it during the life of the trade, and I close it in front of our students. And this is basically 1 year of trading the crypto stuff in two different accounts. This platform called Greeks.live allows you to basically take the deribit account and plot some statistics on that, and especially do some equity lines and stuff.
So let's sum up in a few words what we have been through. Who would you say this type of trading is best suited for, and what are the 2 or 3 most important takeaways you want the viewers to remember from this interview?
In my opinion, this kind of trading is very suitable to, first of all, those asset classes traders, meaning if you are a forex trader, use options on forex because you will just get a lot of advantages if you know how to trade forex and you add the options superpower to that. If you are a crypto trader, use options on crypto because you will get all the options advantages and you can add it to your crypto trading skills. So I would say if you are into one of those markets, definitely use options to make your trading even more profitable. And then I would say that this is very useful even to other asset classes traders, even if you're trading futures, indices, ETFs, or stocks, to get an uncorrelated asset class to trade, because forex especially, but sometimes also crypto, are really not correlated to the markets. So you can really build some interesting stabilizing kind of trading, so that when the markets are going one way, you stabilize it with something that is really non-correlated. In my opinion, this is suitable for all traders that like these 2 asset classes or that are looking to find something to add intelligently on top of their usual trading style.
What would be good resources to learn more about this?
Well,
Not all of
of
us
course,
can take your course in Italian with the physical presence in Milan.
of course, 99% of our material is in Italian. But if there is any interested from the international community to develop some material in English from today on, especially, I would be more than open to produce some free YouTube videos on this. So I'm totally open. If people comments about that and ask for it, I would be more than happy. Unfortunately, I'm not able to advise any book on this topic, especially in English, because I'm not aware of any of that. Maybe I should write one. I think right now the main resource would probably be YouTube, probably looking for forex options or crypto options. Our channel is full of stuff, but everything is in Italian. So let's see. Maybe this could be the occasion to start some international material.
What about books on general options trading, not particularly forex and crypto? Do you have any 2 or 3 books to recommend there that you have benefited from?
I would advise a few books. There are a lot in Italian here, but I would just go with the international ones. I loved this one, Trading Option Greeks by Dan Passarelli. It's a very interesting book, especially if you're at the beginning and you want to go a little deeper into Greeks, especially. Not very practical. It doesn't go into some real strategies, so don't expect to get out with some concrete strategies to trade, but a very practical approach to Greeks, especially if you're interested in this topic. There is this book, How to Calculate Options Prices and Their Greeks. It was written by Pierino Ursone, that is one of Deribit collaborators. He collaborates actively with the crypto option platform that we mentioned, Deribit. And we had a webinar with him recently. He was really insightful. It was really interesting. And he said, yes, I wrote a book about these topics, blah, blah, blah. And I said, wait, tell me the title. And I ordered it immediately. And it arrived a few days later. I found it really interesting, even though pretty mathematically intense. So it means you have to really be willing to go a little down the Black-Scholes rabbit hole. Okay. And last but not least, of course, from our friends of Tasty Trade, the Unlucky Investor's Guide to Options Trading by Julia Spina, but with the foreword of Tom Sosnoff and a lot of the Tasty approach. This is really interesting, especially if you want to go a little deeper into the Tasty Trade approach, but in a more scientific way, not just following their videos, their live streaming, etc. It goes heavy on statistics and options formulas. It's pretty full of charts and studies. So also this one is a little intellectually intense, but very, very interesting. The title is An Approachable Guide to Sustainable Investing Minimal Luck Needed. Okay, so it's really, really interesting. I would say these three are spot on.
And for a little bit less intellectually intense teaching, you may check out some of the other interviews that we have done on this channel about a lot of different strategies for options trading. Andrea, thank you very much for sharing this exciting area of options trading with us and sharing your knowledge and experience. Thank you.
Thank you very much, John. It was really, really enjoyable. Before going away, let me give you one last, less intellectually challenging book that doesn't talk specifically about trading, but on the other side, in my opinion, is the best trading book. It's the best book for trading. That is this, Super Thinking, the big book of mental model by Gabriel Weinberg and Lauren McCann. Gabriel is the inventor of the browser DuckDuckGo. He's the founder of that. And this book is precious for traders because even though it doesn't talk about trading, not even one line, it talks about cognitive biases and mental models. And trading is an intensive activity in terms of cognitive biases. And if you want to get aware of what is happening inside your mind and why you keep doing the same mistakes and why it looks like you're acting stupid sometimes when you trade, this book has all the answers. Not about trading, but for trading.
Andrea, thank you very much.
Thank you again, John.